The job description of an actuary focuses on analyzing financial risks using mathematics, statistics, and economic theories to provide advice on decision-making and future planning. Actuaries are experts in assessing uncertainty and its potential financial impact, particularly in industries such as insurance, pensions, healthcare, and investment. By interpreting complex data and modeling outcomes, actuaries help businesses develop strategies to mitigate potential losses and ensure long-term financial stability. At the core of the actuary's role lies risk evaluation. Whether it's estimating the likelihood of natural disasters, predicting life expectancy for insurance premiums, or calculating pension liabilities over decades, actuaries work with large datasets to forecast future trends and costs. Their work is grounded in accuracy, objectivity, and a deep understanding of the financial systems that influence individual and organizational well-being. The profession demands a unique blend of technical proficiency and business insight. Actuaries must understand how to build and use statistical models while also being able to explain their findings to stakeholders who may not have technical backgrounds. Their contributions are crucial to shaping financial products, designing sustainable benefits schemes, and advising executives on potential risks and rewards. Core responsibilities of an actuary. One of the primary responsibilities of an actuary is to collect, organize, and interpret large sets of data. They begin by identifying patterns and anomalies in data that can help predict future events. This data could range from mortality rates and health statistics to investment returns and market volatility. Actuaries apply mathematical models to simulate various scenarios and assess the likelihood and cost of specific outcomes. In the insurance sector, actuaries calculate premiums and reserves by evaluating the risk profiles of individuals or groups. For example, in life insurance, they determine how long someone is likely to live based on age, health history, and lifestyle habits. These insights ensure that insurance companies remain solvent while offering fair prices to customers. In pensions and retirement planning, actuaries assess how long pensioners will receive benefits and estimate the amount of funding needed to meet these future obligations. They also provide guidance on employer contributions, investment strategies, and long-term sustainability of pension schemes. Their work ensures that retirement systems can fulfill their promises decades into the future. Corporate finance is another area where actuaries operate. They support merger and acquisition activities, estimate the value of intangible assets, and help companies prepare for financial uncertainty. By creating models that simulate economic changes, market movements, or operational disruptions, actuaries enable organizations to make well-informed, risk-conscious decisions. Government and regulatory agencies also rely on actuaries to evaluate the financial impact of public policies. For instance, actuaries help analyze healthcare costs, set Social Security contribution rates, or evaluate the long-term impact of demographic shifts on national budgets. As we approach the midpoint of this discussion, it's clear that the job description of an actuary is not confined to number crunching. It extends to offering strategic insights that influence high-level planning, protect financial integrity, and support long-term decision-making. Key skills and personal attributes. Mathematical proficiency is the bedrock of actuarial work. Actuaries must have an advanced understanding of calculus, probability, statistics, and algebra. These skills allow them to create and manipulate complex formulas, build predictive models, and interpret results accurately. Analytical thinking is equally important. Actuaries must assess problems from multiple perspectives, identify relevant data, and connect various factors to arrive at meaningful conclusions. Their ability to see patterns in uncertainty and derive insight from ambiguity is what makes their work so valuable. Strong communication skills are essential in conveying complex findings to non-specialists. Whether preparing reports for executives or explaining financial forecasts to clients, actuaries must simplify technical information into clear, actionable language. This skill enhances their credibility and ensures that their recommendations are understood and implemented effectively. Computer proficiency, particularly in statistical software and programming languages such as R, Python, and SQL, is necessary for data analysis and model building. Actuaries also use spreadsheets and actuarial software tools to automate calculations and manage large datasets efficiently. Attention to detail is crucial. Small errors in formulas or assumptions can have significant financial consequences, especially when projecting outcomes over long time horizons. Actuaries must be meticulous in their calculations and thorough in their validation processes. Problem solving is at the heart of the actuarial role. Whether it's determining how much to charge for a new insurance product or forecasting the long-term effects of climate change on property portfolios, actuaries must propose solutions that are practical, innovative, and data-driven. Ethical judgment is another essential trait. Actuaries deal with sensitive financial matters that affect people's lives and livelihoods. Upholding honesty, objectivity, and professional integrity is vital to maintaining public trust and adhering to professional standards. Work environment and challenges. Most actuaries work in offices, whether within insurance companies, consulting firms, government agencies, pension funds, or financial institutions. The role generally involves a standard full-time schedule, though deadlines and client demands may require occasional overtime. The work is intellectually demanding, often involving long hours spent on data analysis, model development, and documentation. Staying updated with regulatory changes, technological tools, and economic trends is essential to maintaining relevance and accuracy in their work. The role can be isolating for those who prefer collaborative or people-facing environments. However, actuaries who advance into leadership or consulting roles often engage more directly with clients, executives, and policymakers, making interpersonal skills increasingly important. Despite these challenges, the actuary profession is consistently ranked among the best careers in terms of job satisfaction, salary, work-life balance, and long-term security. The demand for actuaries is strong and expected to grow as businesses and governments increasingly rely on data-driven risk assessment. Educational background and career path. To become an actuary, a strong academic foundation in mathematics, statistics, or actuarial science is essential. Most actuaries hold a bachelor's degree in mathematics, economics, finance, or a related discipline. Some universities offer dedicated actuarial science programs that combine theoretical knowledge with practical training. The path to becoming a fully qualified actuary involves passing a series of rigorous professional exams. These exams are administered by actuarial organizations such as the Society of Actuaries, SOA, the Institute and Faculty of Actuaries, IFOA, or the Casualty Actuarial Society, CAS, depending on the country and specialization. The qualification process can take several years, often pursued while working full-time. Many employers support candidates with study leave, exam reimbursements, and mentorship. As candidates pass exams and gain work experience, they advance from junior analyst roles to associate-level actuaries and eventually attain fellowship status. Actuaries may choose to specialize in areas such as life insurance, general insurance, pensions, healthcare, or investment. Career progression may lead to senior technical roles, management positions, or consulting roles. Some actuaries transition into broader business functions such as risk management, strategic planning, or executive leadership. Conclusion. The job description of an actuary highlights a profession built on precision, foresight, and strategic thinking. Actuaries play a critical role in helping organizations understand the financial consequences of uncertainty and develop plans to manage risk effectively. Their expertise guides major decisions in insurance, pensions, healthcare, investments, and beyond. This role is ideal for individuals who are not only strong in mathematics but also curious, analytical, and eager to make a measurable impact in the financial world. While the path to becoming an actuary is demanding, the rewards include high earning potential, job security, and the opportunity to influence key economic decisions. For those passionate about numbers and problem solving, actuarial science offers a career that is both intellectually fulfilling and socially valuable.